Good morning. The Subcommittee on Housing, Transportation, and Community Development will come to order. Today's hearing will focus on both the promise and the threats that artificial intelligence poses in the housing sector, and I am very much looking forward to our witnesses' testimony and to this conversation. I want to thank Ranking Member Lummis and her staff for your ongoing bipartisan work as we put together this hearing. We both share, I believe, a deep interest in how we can develop federal policy that supports innovation and expands opportunity for everyone to have a safe, decent, affordable place to live. And one of the most consequential innovations in recent years is artificial intelligence. Leader Schumer, Senator Rounds, Senator Young, and Senator Heinrich are leading a bipartisan effort to explore the impacts, opportunities, and threats that AI poses. And they have asked Senate committees to engage in our areas of expertise, which leads us to this committee hearing today, examining what AI means for housing. So without a safe, decent, affordable place to live, nothing in your life works, not your job, your family, your education, your health. So a foundation question is how AI can help or hinder this goal. We know that some aspects of artificial intelligence have been around for a long time, and we also know that major advances are fueling the use of AI in finance and housing in ways that we need to understand. Consumers find AI when they encounter chatbots, when they shop online, or digital helpers that seem to be ubiquitous. And AI plays a role when a prospective tenant is looking to rent an apartment, or a renter submits a maintenance request to a management company, or a family tries to qualify for a home loan, or when a person experiencing homelessness is connected to services. These are powerful tools that hold great potential to cut costs and to target services, to reduce wait times, and to even reduce bias. But they also have the potential to bake in existing inequities and to reduce accountability and even limit opportunity. Today, AI is being used actively in every part of the housing continuum, from emergency homelessness services to mortgage financing. And as I was preparing for this hearing, I found endless applications. AI is being deployed, for example, to help connect people experiencing homelessness with health and housing resources. AI is helping to forecast more precisely and accurately where families are at risk of eviction so that we can better target assistance. Academics and advocates are using AI and machine learning to help understand and map the country's zoning laws and codes spanning 30,000 different localities. And these insights could help us to understand the dense and complicated rules that govern where and how and what types of housing are being built, so that we can make better decisions about how to boost housing supply and lower costs. So there are many opportunities, and there are also some very real concerns about the threats that AI poses. In Minnesota, some landlords are reportedly using AI-generated tenant screening reports that include incorrect and sometimes illegal or off-limits information. The result: it's even harder for people to find a place to rent in some circumstances, and they may never know why they were declined or be able to correct the record. For landlords, maybe it's just easier to move on to the next applicant rather than consider additional information. Another example of how AI, used in a bad way, can be quite harmful. There's a lawsuit in Minnesota right now against a law firm that has allegedly automated the process of filing evictions for landlords. In 1 month, the firm filed 400 eviction complaints. These eviction filings lacked much detail about why the eviction was happening and seemed to routinely lack basic information about lease terms or to include significant errors around lease dates and rental amounts and payment information. So the fact that a firm allegedly leaned on AI to generate a large number of eviction filings with false information, apparently without any meaningful review by an attorney, that's a big problem. Not only is the eviction illegal, but that eviction will live on in public records and hurt the tenant into the future. AI is also increasingly part of how people buy homes. It is used in credit scoring models and automated valuation models, which determine the value of a home. How AI is deployed has major implications for a person's credit scores, their mortgage rates, and whether home ownership and wealth building is even within reach. We know that we have historic, systemic challenges with fairness and equity in this country. My own hometown of Minneapolis has some of the greatest disparities in home ownership between Black and white families of anywhere in the country. So we need to carefully explore whether AI is extending and reinforcing these biases and how it has the potential to correct them. Our excellent witnesses here today have an unenviable task in your opening statements to ground us in both these opportunities and threats in AI and housing in 5 minutes. I look forward to hearing from you, and I also look very much forward to the questions from my colleagues as we follow up after your testimony. With any innovation, there are both opportunities and challenges that we need to balance, and our job is to think about these complex issues so that we can develop the best public policy. So I very much look forward to this conversation. And I now turn to Senator Lummis for her opening statement.
Well, thank you, Madam Chairwoman, and thanks to our witnesses for being here today. Yesterday, I was on an airplane sitting next to a woman who was flying into D.C. so the healthcare business could have their first workshop on AI and healthcare in some public health fields, and how to define AI and use guidelines in a way that will make the sideboards between existing technology and AI more clear. You are way ahead of the game that healthcare was. And Ms. Rice, it's so nice to see you again, because you're the one who came to my office and explained to me how AI can be used in a nefarious way. And before that, I never even would have considered that AI could be used in a way that reinforces bad behavior. And so I'm so pleased to see you here today, and all of you, thank you for coming. So now we're going to explore the range of promises and perils that artificial intelligence can offer to housing in the United States. So there are many potential benefits from the use of AI in housing. Incorporating more information into housing decisions might expand access to credit. Automated tools may expedite the process of approving new housing developments. In rural areas, AI can ease the appraisals process and accelerate supply chains. Now, I'm the broken record on the Banking Committee for my support establishing a regulatory framework for digital assets. But I see some parallels where we have a new technology rapidly changing in a space, and a need for thoughtful consideration of how existing regulations may apply. So from today's hearing, I'd like to better understand what parts of AI fit in today's regulatory framework and what needs to evolve. We've already seen straying into some areas that create perils because they're poorly thought out from the regulatory aspect. This summer, in response to the potential use of AI when providing financial services to customers, the Securities and Exchange Commission proposed a rule called Conflicts of Interest in Predictive Data Analysis. It was an overreaching rule, and the scope got into even using basic spreadsheets as covered technology. So what that did was put unneeded burdens on a new use of an old technology. So we need rules and regulations governing AI to be scoped appropriately, not using it as an excuse to force decades-old technology to comply with a new and unnecessary set of impractical regulations. So I'm delighted to see you here to help us parse the difference. This is a really qualified panel, so this should be a really informative morning. Concerns about AI merit discussion. We need a financial system that gives families access to building wealth and create strong communities through home ownership. Credit decisions should be based on who can repay, not on the color of their skin or the community they call home. We should recognize the risk that AI can, if not trained on complete data and within safeguards, reinforce bias and discrimination. But aggressive action prohibiting innovative AI use is perilous, and we need to find that balance. Today's hearing presents an opportunity to explore the application of AI within the housing space, and I look forward to hearing the testimonies of our witnesses. I'm optimistic about the prospect of harnessing AI to uplift and expand the American housing experience. So let's leverage innovation to improve access to housing in Wyoming and all over the United States. Thank you for being here. Thank you, Madam Chairwoman.
Thank you so much, Senator Lummis. And I also am just really grateful that Senator Rounds is here. I know that you have done a lot of work in this space across the board in your leadership of that bipartisan task force that that you and Senator Schumer are leading. So thank you very much. I'm glad you're here. Thank you. So we have 3 witnesses with us today. I'll introduce each of them. Dr. Vanessa Perry is Interim Dean and Professor at the George Washington University School of Business and Non-Resident Fellow at the Urban Institute's Housing Finance Policy Center. Dr. Perry has extensive experience in the use of AI in mortgage finance and home ownership. She previously held positions at the Department of Housing and Urban Development, the Consumer Finance Protection Bureau, and Freddie Mac. Dr. Perry earned her PhD from the University of North Carolina at Chapel Hill and an MBA from Washington University in St. Louis. Ms. Lisa Rice is the president and CEO of the National Fair Housing Alliance. Ms. Rice leads the Alliance's work on eliminating housing discrimination and addressing the evolving role of artificial intelligence in housing. She has provided expert testimony to the Banking Housing Committee, the Bipartisan Senate AI Forums, and the House Financial Services Committee. Ms. Rice previously served as the CEO of the Toledo Fair Housing Center and the Northwest Ohio Development Agency. And we have Nick Schmidt with us today, who is a partner and artificial intelligence practice leader at BLDS and the founder and CTO of Solus AI. Did I say that correctly? Yeah, close enough, he says. BLDS is a consulting firm that specializes in statistics and economics. Mr. Schmidt's work focuses on algorithmic fairness, explainable AI, and model governance practices. He founded Solus AI, a compliance-focused AI platform that works to identify and mitigate bias in algorithmic decision-making. He earned his MBA from the University of Chicago's Booth School of Business. So we'll begin with Ms. Rice and just go down the line. You each have 5 minutes for your opening statements, and each of you have a clock in front of you, which will count down the time, and your full written statement will be made a part of the record. Ms. Rice, you can begin.
Chairwoman Smith, Ranking Member Lamas, and other distinguished members of the Senate Subcommittee on Housing, Transportation, and Community Development, thank you for the opportunity to testify during this hearing on artificial intelligence. The National Fair Housing Alliance works to eliminate all forms of housing and lending discrimination and ensure equal opportunities for all people. We are the trade association for over 170 fair housing organizations throughout the U.S. and its territories. We know that technology is the new civil and human rights frontier. That is why we are committed to creating automated systems that are fair, explainable, and trustworthy. It is why we also create and promote policies, frameworks, and other tools to advance responsible AI principles. Artificial intelligence holds great promise for improving systems, democratizing opportunities, lowering costs, and increasing productivity. Yet it also holds great dangers for perpetuating bias, spreading misinformation, excluding people from necessary services, and generating other harms. AI is used extensively in the housing and financial sectors, including in credit scoring, tenant screening, automated underwriting, risk-based pricing, dynamic rental pricing, marketing, and many other areas. All these processes can manifest bias and extensive harm to consumers, communities, and our economy. Large language models like ChatGPT can also present challenges like data privacy, security, bias, and accuracy concerns. Through our work, we have uncovered discrimination in all these systems. For example, our investigation against a major insurance company in which we examined a third-party scoring system used by the insurer showed the system was overcharging Black consumers at rates that exceeded their commensurate level of risk. Our findings in that case are similar to findings by researchers at Berkeley that found algorithmic pricing models discriminate against Black and Latino consumers by overcharging them to the tune of $765 million per year. Consumers who live in communities with few mainstream banks like rural areas and communities of color, can often be negatively impacted by AI systems that rely heavily on data contained in the credit reporting agencies. For example, the CFPB reports that consumers in southern rural areas of the U.S. disproportionately have lower credit scores because, in part, they have lower access to physical and online mainstream financial services and products. While AI can present serious threats, it can also be used for good. For example, NAFA uses AI tools to conduct research that is helping expand credit and housing opportunities for underserved groups and communities. Just this month, we released important research completed in conjunction with Fairplay AI, documenting a novel approach for debiasing algorithmic models that simultaneously optimizes for high-quality model performance. Most previous research on fairness techniques have shown a trade-off, lower model accuracy for increased fairness. The novel approach at the center of our research, which is based on distribution matching, presents the ability to optimize models for both fairness and accuracy. In addition to debiasing systems, AI can be used to detect discrimination risks, build systems that can expand access to credit, provide financial services to consumers more efficiently, optimize privacy, identify barriers to fair and affordable housing and zoning ordinances, and other positive activities. To ensure AI can be optimized for good, Congress must first do everything possible to ensure federal agencies, researchers, and NGOs can apply existing laws and standards to the use of automated systems. Congress must ensure agencies have sufficient resources to tackle the issues. And Congress must pass legislation that both supports innovation and protects our society to ensure the U.S. can continue to lead the world in the development of responsible AI. Thank you.
Thank you very much. Dr. Perry.
Thank you. Good morning. My name is Vanessa Perry. I am a professor and interim dean at the George Washington University School of Business and a non-resident fellow at the Housing Finance Policy Center at the Urban Institute, focusing on consumers and housing and financial markets. I want to thank Chairwoman Smith and Ranking Member Loomis for inviting me to testify on the impact of artificial intelligence, which is being employed increasingly throughout the housing and mortgage industry. Based on my 3 decades of research in this field, regulation of AI warrants urgent attention. While these models can enhance efficiency, they can have unintended impacts on fairness and equity. Compared to traditional models, AI relies on a wider range of data inputs and more complex combinations thereof. Although intricate multivariate algorithms have been used in the mortgage industry for years, AI models have the potential to incorporate new data sources. Due to their complexity, it is difficult, but not impossible, for anyone other than AI developers to scrutinize and monitor their inputs. AI is already widespread in the mortgage market. AI digital marketing models target prospective homebuyers, and communications with customers are intermediated by AI chatbots. Credit scoring companies and mortgage underwriting systems use AI to evaluate credit risk. AI models are used for property valuation, loan servicing, and loss mitigation. Because these models rely on historical data, there is the potential for them to systematize and amplify discrimination and inequality. For example, due to the legacy of redlining and segregation and their effects on present-day neighborhood conditions and home values, why should we expect AI to produce estimates that are both accurate and fair? And absent guardrails, how would we know if AI models were to incorporate data elements such as GPS location that serve as a proxy for race, gender, or ability? AI models are not subject to human error, and they enable more accurate and consistent decisions. Depending on how they are developed, their enhanced capabilities could expand access to homeownership for households currently underrepresented in the mortgage market. For example, AI can produce faster and less subjective estimates than human property appraisals and can devise credit scores for those who lack a traditional credit history. To address concerns about AI's impact on access to the housing finance system for underrepresented communities, My colleagues and I have proposed 5 factors summarizing the societal, ethical, legal, and practical issues that should be considered in the development and implementation of AI. They form a memorable acronym: SCALE. First, societal values. Algorithms tell us what factors the developers think are important, in what order, and to what degree. AI models should consider the socioeconomic and historical context, such as past discrimination, and should align with prevailing legal and ethical paradigms, such as disparate impact law, individual freedom, privacy, and racial equity. Next is contextual integrity. Model inputs should be relevant to the mortgage and housing domain and may differ substantively from those used for other or less consequential contexts. Then, accuracy. Models should be reliable, error-free, unbiased, and representative of all demographic and income groups across varying macroeconomic conditions. Next, legality. The model and its inputs should not incorporate characteristics protected by fair lending laws or generate unjustified disparate impacts based on these characteristics. Finally, expanded opportunity. AI models should significantly increase access to credit in addition to offering greater cost efficiency or risk assessment benefits. This criterion represents a higher bar than existing regulatory frameworks and has perhaps the most promising impact on the economy and communities. This framework could inform new or expanded regulations, such as guidance for the use of certain types of data, for example, an individual's social media profile, for certain purposes, such as mortgage lending decisions. If designed to do so, AI models can increase access to home ownership and eradicate the effects of systemic discrimination while increasing accuracy and efficiency in the mortgage value chain. We need new laws on the federal level that utilize the scale factors previously enumerated at every stage of the AI lifecycle. Thank you again for the opportunity to testify here today, and I look forward to answering your questions.
Thank you very much. Now we'll hear from Mr. Schmidt.
Thank you. Chair Smith, Ranking Member Loomis, Senator Rounds, and the esteemed members of the subcommittee, thank you for this opportunity to share my experience and insights into how AI is revolutionizing the housing sector and how we can make it safer, fairer, and more accountable. I'm Nicholas Schmidt, the founder and CTO of Solas AI. I'm also the practice leader at BLDS. I've spent nearly 25 years working to ensure that data, algorithms, and statistics are applied fairly, and I've spent the last decade devoted to the responsible and ethical application of AI and machine learning, and with a significant portion of my work focused on credit and housing. Examples of AI, including the amazing ability of generative AI and the horror of deepfakes and what they might do to our democracy, drive our fear, our fascination, speculation. But really, as amazing and as scary as those truly are, the more mundane examples of AI in machine learning are just as important, especially in housing. We must recognize that these technologies are already shaping many aspects of the industry, and getting distracted by those sort of shinier aspects of AI may take our eyes off the ball at a time that is really critical. So what we should consider is that while an AI algorithm could help enable people to get a home loan for the first time, it could also drive a decision to evict someone from their home or apartment without sufficient justification. Because of the former, we want to encourage the adoption of the technology. Because of the latter, we want to make sure that it's only used responsibly. This is only possible through effective regulation. When considering this, what is really important to remember is that these systems are driven by human decisions. Unfortunately, this human-centric nature of AI development is overlooked. But AI is not self-operating, and claiming so is a dangerous notion. It absolves us of the responsibility and also ignores the numerous opportunities we have to shape AI for the better. Just to illustrate this, let's consider a mortgage underwriting algorithm. I'm going to go through some of the ways in which a human impacts how that algorithm ultimately operates. Determining what data to use, Should you use something like education or purchase history? How do you define delinquency? That's going to make a very large impact on people who have income insecurity but are ultimately able to pay their mortgages over time. That'll make a big difference over whether or not they'll actually get a loan. What algorithm should the lender use? That affects not only discrimination, fairness, accountability, but also potentially the safety and soundness of the lender. No algorithm is perfect. We have to make a decision. Is the algorithm good enough to put into production? And finally, someone has to decide how to use the algorithm. All of these decision points offer an opportunity for smart intervention. And when considering such regulation that comes out of this intervention, we should remember that these technologies are not new to housing. We do not need to reinvent the wheel. Instead, we should learn from the practices and frameworks to create a strong and reasonable regulatory environment. In particular, there are three things I'll mention: the Federal Reserve's SR 11.7 policy, the NIST AI risk management framework, and SP 1270 guidance, and the disparate impact and disparate treatment framework from the Fair Housing Act and potentially ACOA. We shall see what the courts say about that. But out of these frameworks and practices, I want to distill this down to 4 principles: fairness, transparency, accountability, and materiality. Fairness, disparate impact and disparate treatment. And regulators should set expectations that bias and discrimination should be measured and mitigated in AI systems. But really importantly, fairness is not just about anti-discrimination. And it is an issue that everyone here has a self-interest in. What is being put into some, not all, but some AI systems is not fair to anyone, regardless of their race, ethnicity, sex, or age. We need to empower regulators to set and enforce principles-based standards for data inclusion. Transparency. If a person receives a negative outcome from an AI-based decision, they should have the right to understand why. Accountability. If you are negatively impacted, you should have a right to appeal if it's a sufficiently high-stakes decision. Additionally, people or entities that deploy AI systems irresponsibly should face the appropriate consequences. And materiality. Businesses need to understand and make risk-based decisions. You can't have, for example, an Excel spreadsheet subject to the same regulations and requirements and oversight as a credit underwriting algorithm that is scoring millions of people. Doing so ultimately is ineffective for all of our goals. So by considering these 4 sets of principles, we really can develop a balanced regulatory approach. And by fostering collaboration among all of the stakeholders, we really do have a potential to harness AI's value in housing. With this, I really do believe that AI can serve as a force for good. Thank you very much for the opportunity to share my insight.
Great. Thank you so much to all of our panelists. And we'll now begin a round of questioning from colleagues, and I will start. So each of you, it seems to me, are highlighting both the opportunities and also the risks of AI. And but I'm struck by how, I guess I want to dive in a little bit more into how, we know that AI used in housing could pose significant risks, but I'm wondering if you could talk a bit more about what the beneficial applications for AI might be. Let's say, just take, for example, a goal of figuring out how to increase home ownership amongst traditionally, people who've been traditionally unable to buy their own home. AI is a tool. How could AI, just as an example, be used as a tool to advance that goal? And anybody, I'd love to hear what you have to say about that, if it's implemented correctly. Ms. Rice.
I can start. As I shared, we have just released research this month using AI to help expand access to credit for people who are credit worthy. and have been kept out of the financial mainstream. There are many organizations, and our research shows that we can increase fairness and access by about 13% for underserved groups. There are many organizations, I take that back, not many, but there are some organizations that are working on using AI and other forms of technologies to incorporate factors that are currently not included in our the underwriting systems and the credit scoring systems that we utilize today in order to determine if people can access credit opportunities. So I'll give you an example. Rental housing payment information. This is a very viable factor. It is an important and highly predictive variable that is not included in the underscoring systems that we utilize today. That missing factor, that missing information, that missing data could really open up the aperture for opportunity, particularly for people who live in rural communities. As I stated before, the CFPB's research and other research shows that people in rural areas have disproportionately lower credit scores, not because they're less credit worthy, but because they don't have access to the mainstream financial services that regularly report positive data to the credit repositories. So if you access credit outside the financial mainstream, using rental housing payment information can really increase access to affordable credit opportunities.
So because it is, if AI is including sort of better information, less biased information, potentially information that isn't included in regular decision-making, you could actually have a net positive impact on the fairness of the system.
That's right.
Right. Thank you. Let me ask a kind of a different question. Like, how do we address this so-called black box phenomenon in AI, where you have an AI tool that includes machine learning, so it is constantly learning and changing the way it's, improving supposedly the way that it's making decision making, but it seems to sort of spit out an answer at the end, and the question is like, where did that answer come from? Could Mr. Schmidt or Dr. Perry, could you just address that? How do we actually get accountability when you have that kind of a technological tool?
So there are two issues here. One is directly your question, and how do we deal with these incredibly opaque algorithms? But then there's another important piece, which is, should we even be worrying about this in high-risk situations? Or should we be using more interpretable, requiring more interpretable, more understandable algorithms? And the way that this is first sort of surfaced over the last 5 or 10 years is been this idea that in order to have accuracy, you had to have an opaque black box. By being able to incorporate lots of interactions and nonlinear relationships and all sorts of difficult math, you would get a more accurate measure of, say, credit outcomes. What has happened over recent years is that people have realized that you don't need to have these incredibly opaque algorithms. You can actually develop ones that are pretty understandable. And so I believe that those are going to become much more commonly used in these high stakes decisions.
Interesting. Thank you. Dr. Perry, I'm out of time, but if there's anything that you'd like to add, I'd love to hear from you.
Just wanted to add that because these models are dynamic, they change often. The question is, which version of a model even would you scrutinize or monitor?
Yeah, thank you. Senator Lummis.
Thank you, Madam Chairwoman. Mr. Schmidt, welcome. You have an interesting job and an important one in terms of helping us understand the 4 criteria you mentioned in your testimony. With regard to transparency, what level of explanation do you think companies and organizations should provide to consumers?
So I think that there are two principles that need to apply. One of them is transparency into the process that they have undergone, and that will allow people to understand whether or not the data that was used was fair, as well as the process, and whether or not the data was right. So were they using some factor, education in a situation where education really didn't belong? Or maybe they got the education of the person wrong. Being able to understand and appeal those decisions is very important. The other area where this is really important is having some sort of understanding of how to improve one's outcome. So you got rejected and you got told that it's, had, I don't know, number of delinquencies in the past 60 days. Maybe that one's easy to figure out how to rectify, but in these complex systems, it could be much more difficult than that. And giving people a clear framework to move from being rejected to being accepted, I think could be a very helpful public policy goal.
Another question, this one about data privacy. How do you think companies that use AI models for housing should be thinking about data privacy?
I would like to preface this by saying that I'm not a data privacy expert, but what I have seen in my experience, particularly with large lenders and other organizations that are really leading the financial system, is that data privacy is very high priority. And making sure that there are not data leakages people spend inordinate amounts of time on. So I think that is something that is very well recognized and something that the industry is really striving towards.
So what is the weakest link here? When you named those 4 criteria, which one is crying in need of improvement?
The one that keeps me up at night is fairness. And this is both from, again, anti-discrimination in the traditional sense of the word, as well as fairness for everybody in this room. The quality of models being built across all industries is low. That is absolutely not universal. There are brilliant people doing very brilliant work, but there is a lot of stuff going on there that is extremely low quality. And what we need is to have the same kind of or similar model governance standards that were put forward by the Fed and the OCC, put into lower tier lending institutions and places like the healthcare industry. Because you are absolutely right that the financial system, financial industry is light years ahead of every other industry. And the potential for damage if strong model governance is not put into place, astronomical.
Can you help with that? Have you studied this enough that you're beginning to see how to break through those areas where the data is being used in a very unsophisticated way?
These are mostly people problems. The problem with data scientists and data science is that colloquially I'd say they're drunk on algorithms. Mm-hmm. They get very excited by the math. Mm-hmm. And they get very excited by the next new thing. And they don't take a step away and say, what is it I'm doing? And so I think that the first step is making people answer questions, making the model builders answer questions. What is it I'm putting in here? Why am I putting it in this model? What purpose does it serve? And the way that can happen effectively is by requiring effective model governance. And if I may, the other thing that is really important is having lawyers in the middle of the room and in the questions. I always tell my clients that lawyers are the best data scientists because they're the most skeptical, and negative people in a room. And so, and that's really what is needed in data science. So we need lawyers and compliance and people like all the ones who are laughing in this room, because you are the people who are going to question the data scientists and get them to start doing better work.
Well, thank you. As a lawyer, I resemble that remark. So thank you very much. I yield back. Thank you,
Senator
Madam Chair.
Lamas. Senator Menendez.
Thank you, Madam Chair. And as a lawyer, I'm not going to speak as a lawyer today. I'm going to speak as a legislator, so I can avoid that. Because of the way AI learns by studying large sets of data, if there is a bias in the underlying data, it can become encoded in AI's decision-making process. And when it comes to housing, the historical data reflects years of redlining, disparities in wealth, access to credit, appraisal bias, among others. So, Ms. Rice, Dr. Perry, how can we work to ensure that AI doesn't stratify or even expand existing disparities in housing?
Sure, I can take a first crack at that. There are multiple ways that we have to work to make sure that AI doesn't magnify existing inequities. So one way is to take steps to audit and monitor AI, to examine it pre-production, pre-deployment, and also post-deployment. We have developed actually a what we believe is a state-of-the-art framework. It's called Purpose, Process, and Monitoring. We believe that it's a state-of-the-art auditing framework to help ensure that algorithms are fair and equitable, and that they do not pose harm to consumers. Unfortunately, we do know, Senator Menendez, that many models that have been deployed are exacting harms on consumers. We have clear evidence of that. So what the purpose monitoring process and monitoring framework does is it helps model developers answer all of the questions that Nick just talked about, right? Is this a good use for whatever problem it is that you're trying to solve? Does it need an algorithmic or an AI solution? Because there are many problems that need to be solved that don't necessarily need an AI solution. It examines the data. It examines the model development and the efficacy and accuracy of that model. And then it also looks at the potential and examines the potential for harms, and it identifies or I should say, compels model developers to look at less discriminatory alternatives while they are designing the model. Models can also change post-deployment, right? Their effectiveness, just because a model is effective on day one doesn't mean it is going to still be highly effective and accurate on day 200. So you have to continually be auditing and monitoring that model to make sure that it is still efficacious.
Thank you. Dr. Perry, anything you want to add to that?
Yes, I would just like to add that in order to sort of prevent these models from reproducing existing discrimination or past discrimination, the one thing to do is to intentionally design models that explicitly remove those effects and reduce those effects. And actually, that's one of the great promises of these tools, is that they can be programmed explicitly to remove the effects of past discrimination because they are more capable of identifying them than the sort of traditional models that we've relied on in this industry for so long.
Yeah. Let me follow up this line of questioning with that problem is further magnified by the challenge of explainability. That is, the results of AI models and the steps that led them to where they are can be difficult to parse due to the complexity of the algorithms and the underlying data. How should we think about issues of accountability and oversight when it comes to these AI models and the data that they use? And I welcome anybody's.
I will start. My opinion is to effectively monitor. We need to examine, one, the guiding principles that are used to create these models, the inputs, which data could potentially be used, and which are prohibited by the models, and then finally the effects. So the entire process, with the understanding that regulatory agencies may not necessarily have the resources to do the volume of monitoring and enforcement that we are accustomed to. So we definitely need stronger protections and processes in place to make this happen.
And Senator Menendez, I'll just add that a couple of weeks ago, we held our inaugural Responsible AI Symposium. And I had the privilege of hosting a segment with the heads of all of the federal regulatory agencies. And I posed this question to them. And they each said that we currently have existing laws on the books that effectively govern many aspects of AI development and usage. And they are working to make sure that their agencies are adept and can enforce and exercise effective oversight over the use of AI, particularly in financial services. Now, one of the challenges is getting staff that are educated and trained on these systems and usages. That is a huge lift. I will tell you, when we stood up our responsible AI division, we had to comb the globe to find someone to head it up. And we did find someone in Canada, not in the United States. So we have to really do a good job of making sure that our citizens, our students, are well educated in this area. Mm-hmm. The other thing that they mentioned is that they need resources. They need effective resources, and they need to be using AI tools themselves in order to effectively police this area.
Thank you very much. Senator Rounds.
Thank you, Madam Chair. And let me just first of all say thank you for doing this hearing today for both of you. The AI working group, when we started the program, one of the things that we talked about is we wanted every single committee to be able to participate because of the expertise on the committees and the individuals who participated in meetings like this to share their points of view and their recommendations. So I really appreciate your jumping on as early as you have. You're probably one of the first subcommittees to actually have a significant opportunity to talk about a specific area in which AI does make a difference. And I also want to say, Ms. Rice, what you've indicated in terms of the personnel issue is something that we have to take into account. And we're never going to have enough experts on this. And so to be able to share those experts is one of the reasons why NIST, I think, is going to be very important, being a location where we can find individuals from industry who can come in and participate and help to bring that expertise to the committees as well as to the organizations responsible for overseeing AI development. I also wanted to, Mr. Schmidt, I think you would agree with me on this, but I want to get your thoughts. I think that a company is responsible and has to abide by the Fair Credit Reporting Act, the Fair Housing Act, the Equal Credit Opportunity Act, regardless of what technology that they are using, AI or otherwise, correct?
Correct.
So really, one of the challenges we've got is how do we make sure that within an algorithm or within a decision-making process, because AI really is simply a very, very fast decision-making process that is now available to us, but one in which a computer system and a use of formulas actually learns from itself whether or not it was making correct decisions and modifies it, as Dr. Perry indicated, can modify itself along the way. And so what I'm curious about is I think I don't think we can be afraid of the technology, but I think we've got to be able to leverage the best of it while at the same time being able to provide the regulators the ability to ask the questions and to make modifications or request modifications should there be biases identified. Can you think of any program that we've ever made that doesn't have some biases built into it?
No.
So really the challenge for us is how do we identify those biases? And in fact, any adult who is responsible for making decisions today, is there a human that doesn't have biases built into their decision making?
I've yet to meet one.
Yeah. So really the question for us is how do we overcome those human attributes and allow a machine to do a better job of making decisions that eliminates the biases that we're trying to get out of our decision making processes? Fair enough?
Yes.
Okay. Let me just, I know that we're going to have a lot of discussions about the problems and the challenges that we're going to have anytime we bring in a new type of technology, but I wanted to close with this. And it's going to come right back down to what Ms. Rice had indicated. Suitable AI talent is going to be in high demand. J.P. Morgan said in May of 2023 that it had hired 900 data scientists, 600 machine learning engineers, and 200 AI researchers to execute its technology initiatives. Google has hired thousands of researchers and engineers to work on machine learning and AI. However, I believe that it's critical that AI solutions reach beyond our largest companies. We learned at the end of the last year that between 2022 and 2023, the number of people experiencing homelessness on a given night increased in the United States by 12% to 653,104 people, the highest number of people recorded since the inception of the annual count in 2007. Researchers have used AI to identify individuals most at risk for losing their housing to target with homelessness prevention assistance. Now, I think this is one of the things that we should do a better job on. And if we can eliminate some of the challenges we have just in terms of the number of individuals that we have to impact, AI could actually help us identify those individuals before they become homeless. Mr. Schmidt, could you discuss what steps we need to take now to provide the AI workforce of tomorrow and how we make certain that AI talent is reaching areas like homelessness prevention?
To address the latter half of your question, I think that it's very important that we encourage organizations like Ms. Rice's, as well as academia and the type of work that Ms. Perry is doing, because quite frankly, industry is not likely to jump on those sorts of things. And we have to put the incentives in the right places and give the right people the right money and ability to put forward those sorts of programs. So that's what I would say about that. And then in terms of the talent gap, what we really need to do is concentrate on both STEM and liberal arts. What we need are well-rounded people. I've worked in tech-type companies my entire career, and I've always liked hiring English majors and history majors and teaching them how to do statistics, because they're the ones who are really thoughtful. And so what we want to do is we want to encourage that. We want to encourage an educational system that is focused on questioning things, really getting into why are we doing things, and then the technology is secondary. That you can learn. My company, actually, so I founded it 4 years ago. The first Python program I ever wrote became my company. And so I learned that, I guess can teach an old dog new tricks. I learned it later. And I think that many people can learn those kinds of things if they're given the right education to start with.
Thank you, and thank you for your leniency on the time today, Madam Chair.
Thank you, Senator Rounds. Senator Warnock.
Thank you, Madam Chair, and amen to Mr. Nicholas Schmidt on hiring folks with education in the humanities who think critically about these issues. Georgia is in a housing crisis, and it is not getting better. Since 2019, rent in Georgia has increased 13.7%. This is one of the highest increases in the country. But Georgia's not alone. According to Moody's Analytics, the amount that Americans are spending on rent is at a record high for the first time last year. The average apartment cost over 30% of a family's monthly income. One factor driving rents up may be the use of AI software by some of the nation's largest and most powerful rental property management companies. As a ProPublica report details, this AI software looks at data across multiple companies and multiple buildings in the same area and then recommends a monthly rental price. I am concerned that these tools may enable property management to coordinate pricing, coordinate escalation, inflate rents, and stifle competition. Ms. Rice, folks across Georgia are feeling the rental pinch. How can we ensure that AI-driven rental software is not being weaponized to artificially inflate the rental market?
Senator Warnock, thank you for that question. And you're talking about dynamic pricing systems, and you're absolutely right. We are very concerned about these systems and believe that they are contributing to the increase in rental housing prices. And because the systems are operated by a few companies that amass data amongst a number of different landlords throughout a region, there is a great propensity for reducing competition because those systems are conveying to all of those different landlords essentially the same kind of dynamic pricing. So an apartment complex that may not be getting a lot of inquiries can still elevate their prices because their competitors are getting a lot of inquiries, right? So it does really work sort of cross purposes when you think about fair and affordable housing principles. The other danger is that there is very little transparency around these systems. So if a consumer wants to know why did the price increase from day one to day two, the only information the consumer gets back is, well, this is what the algorithm is saying the price is today. There's no explainability or transparency around why that price increase happened. So unfortunately, this is an area where we do need increased regulation. We're trying to use current fair housing laws to tackle this this problem. We're also trying to use current antitrust laws to tackle this process, and we're not getting where we really need to be. So we do need increased regulation here. The only thing that I will add is that local jurisdictions may be able to use tools that they have to tamp down on the utilization of dynamic pricing algorithms, but that remains to be seen.
So in an ironic way, and AI is here to stay, which is why we're having, obviously, which is why we're having a conversation. But in a way, it sort of mitigates against natural competition in the market. This is falsely derived through these algorithms, and they're opaque. It's difficult to get through to ask the kinds of questions that we need to ask. So this is a unique threat that Congress has to address. This is affecting renters, but home ownership and the impact of these algorithms are impacting communities of color. Buying a home, access to credit has been a long, significant barrier. Techniques like machine learning and artificial intelligence can improve credit access by incorporating more types of data like paying utility bills and rental history to demonstrate that someone is credit worthy. But they can recreate in code historical disparities and discrimination in the housing market. So I'd like to quickly ask Dr. Perry, as credit scoring models become increasingly sophisticated, how do we ensure that these models do not perpetuate through the algorithm's historical discrimination?
Thanks for the question. In order to ensure that these models, which many of which operate in a sort of black box, which is one of the key issues that we're concerned with, is really to require that we adopt ways to monitor and scrutinize every aspect of the model development process. I can't say it enough how important it is to have a set of guiding principles or goals that drive the development from the outset. Then we need to know exactly what inputs are currently being used and what inputs could potentially be used. Then we need to look at the way those inputs are combined. And finally, we need to do effects testing. But we can't just look at effects the way that we currently look at, say, tests for disparate impact, because this is far more complicated than that and requires far more information. And these models take a long time to develop, but they also are changing on a dynamic basis. And that's why it's really important to know what the goals of the model are up front. That said, I think there's really great potential, because for everything you can program the AI to optimize, you can also program it to optimize opportunity and fairness. You can tell it explicitly, do not look at factors that are correlated with race, ethnicity, ability, or any other kinds of protected factors or prohibited factors.
Thank you. Thank you very much.
Thank you very much, Madam Chair.
Senator Cortez Masto.
Thank you, Madam Chair and our ranking member. This is a great conversation. I'm going to follow up on this, but I'm going to ask Dr. Schmidt, if you would, Mr. Schmidt, talk a little bit about automated valuation models and home appraisals. Right? There's positives because it should lower costs. It should hopefully decrease bias, which we have been talking about. But you also note that the data used to build an automated valuation model will be biased. Could be biased, right? And you have software programmed to address this issue. So talk to us how you're decreasing that discrimination as the initial data going into these models.
Sure. So the problem with any kind of pricing model, automated valuation model, is that it is necessarily going to be looking at location. That's what drives price. Well, what do we know about locations and housing in America? It's got a history that goes up to today of discrimination. That has not ended. And so if you are building a model that incorporates information about location, which you have to do to get an accurate model, you are building a discriminatory model. But there are two things that kind of make it better. One of them is relative to the alternative. If you think about the potential bias, not necessarily, but potential bias of a human appraiser, and there's been a lot of investigations and work on that that's shown that there's a really high risk of human appraisal bias. Very unlikely that will be explicitly built into an automated valuation model. So what that means is that within a particular geography that you're controlling for in one of these models, you're likely to remove that idiosyncratic bias from the appraiser. But the fact that you are controlling from one geography to another means that you're incorporating that geographic level discrimination. So I think of AVMs as having, they're a step, maybe a small step in the right direction. They are also much cheaper in rural settings. My understanding is in rural areas, it can be impossible to get a human appraisal. If there's good enough data, then an AVM could provide one. So there are many reasons why an AVM would represent just a sort of uniform improvement relative to current not ideal practices.
So let me ask you this, because this is a concern. I see where we're going, and I think my colleague's absolutely right. AI is here, and people are going to start using it, and they'll start using it in the appraisal process. I know in Las Vegas, in the metropolitan area, home values in a majority of our black neighborhoods were devalued by at least 12%. That's over $22,000 difference compared to neighborhoods with fewer than 1% of black residents. How do we ensure that that bias doesn't get put into these models?
So it will.
So then how do we adjust for that? I guess
Yes,
that's the concern.
but there is yet another aspect to it, which is, Ms. Rice was talking about it, and it's actually the center of my work, which is called Searching for Less Discriminatory Alternative Models. And it actually works better in AI and machine learning. And what it turns out in machine learning models is that you can have thousands, really an infinite number of ways to specify these models, including certain information, excluding other information, changing what are called hyperparameters, which are kind of the knobs and dials that slightly change the algorithm. All of these can have, or changing the algorithm itself, all of these can have an effect on the bias as well as the quality of the model. In machine learning, it turns out there are just way more opportunities. And so what I've developed and what Ms. Rice's organization has developed and other very good organizations are working on are finding those fairer models. And that's where things can continue to improve.
Okay. Any other comments, Ms. Rice?
Thank you, Senator Cortez Masto. I will say and remind us that not every issue warrants a technological response. So there is still, let's still remember that we have human beings that are highly trained to perform these types of appraisals, and we have to use them. Now, that said, AVMs, while they can be a useful tool, they are not as accurate in every community. So they don't have the same level of performance. And so we do find that AVM models are less accurate. In fact, in some communities, they have a 15% degree of accuracy. So I think you'd agree you would not want to use an AVM model in a community that has a 15% degree of accuracy. That we're finding that in rural areas, and we're finding it in predominantly Black and Latino areas. AVM models are much more predictive in areas that have a lot of new housing development and that are predominantly white. So we are working on tools to make AVM models fairer. What will make AVM models fairer is if we change the construct or the approach that we currently use to determine property values. Right now, we use a sales comparison approach, which, as Nick has already said, requires that I look at what the house across the street from me sold or the house around the block from me sold. We have worked extensively with the insurance sector to change their valuation, their property valuation models to make them fairer by considering the cost of reconstruction and making sure that we have accurate data that can assess what is that reconstruction cost, and that gets embedded or enfolded into the valuation process.
Thank you. Thank you very much.
Thank you so much. Senator Lummis. We're going to move to a second round of questions for anybody who has them.
Thank you, Madam Chairwoman. And I'd like to start just by saying, Mr. Schmidt, you finally gave me an explanation for what I can tell people my son-in-law does. And I've wondered how to explain what he does for years. Now I know. He manages teams of people who are drunk on algorithms to make a product that's useful by sober people. So thank you for that. I finally know how to explain what he does. Okay. Panel, thank you so much. I have the same question for each one of you to conclude my questioning. And I'd like to start with you, Dr. Perry. What regulatory approach would you advocate for this committee to pursue? What guiding principles can you point us towards? How can you help us be relevant in this discussion?
Thank you, Senator Loomis, for the question. I think that the most important consideration is holding AI accountable for expanding opportunity. More so than anything, I think that is of critical importance. It's also important to move really very quickly because the industry is already adopting and applying these tools in ways we're not even aware.
Thank you. Ms. Rice.
We are.
Oh, there you go. There's your microphone.
Oh, great. Thank you, Senator Lummis. Thank you so much for the question. First, I'd say I'd echo what I said earlier, that we already have a bevy of existing laws and regulations that apply in this sector. And so what we can do is help you understand the extent of that. And one of the things that we're thinking about is pulling together sort of a matrix, some matrices that explain what are the existing laws and regulations that are in place, and then understanding what we need to do to enforce those existing laws and standards. But the second I will note is that there are gaps. There are clearly gaps, and we're finding that. We talked about a gap with the rental dynamic pricing schemes. And so listing where there are gaps, and then helping legislators understand what it would really take to fill those gaps. And here I do advocate for an intersectoral approach, because you're going to need academicians, you're going to need developers, you're going to need industry, and you're going to need civil rights and human rights organizations to understand, how to design the legislation so that we are addressing those gaps that do exist.
Thank you. Mr. Schmidt?
So I would really repeat what my co-panelist said. I think we need to move fast. I think it's extremely important to recognize that existing regulations already cover 90% of it. What I have seen the Consumer Financial Protection Bureau, CFPB, and the OCC doing, I cannot say enough for. I think they are really moving in the right direction. They're doing excellent work, and they should be empowered to keep going in those directions. What I see is that industry is responding in a way that is really right. The other thing I would say is just that we need to make sure that our regulators are that they have the education, they have the experience that they need. What the Bureau has done from 2016 to today, I think they've done an amazing amount of self-education and bringing on really good people, and they're doing a great job considering the resources they have, but they could use more.
Thank you. Ms. Rice.
Senator Lummis, can I just mention one thing? Section 230, the Communications Decency Act, we are going to have to revisit it.
Thank you for that. This has been a great panel. Thanks for your work in this area. This is all new to me, so your guidance is deeply appreciated. Thanks, Madam Chairwoman, for holding this hearing. I yield back.
Thank you so much. I just have a follow-up question, kind of along the lines of what Senator Lummis was asking about. There have been some efforts at the state level creating legislation and guidance around AI implementation. Mr. Schmidt or anybody, would you just comment? Do you see anything out there at the state level that you think is good or something that we should be cautious about?
The New York Department of Financial Services just released an insurance circular for insurance, and of course, I could quibble with a few things, but really I could have written the thing myself and been proud of it. I think that what they have done is excellent and really principle-based and based in existing regulation and law, and could be very effective.
That's great. Anybody else have a comment about state-led efforts that you think are useful or something to not do?
There's a number of states that have done some really impressive things, and the concern that I have now is that they're going to be different from each other, and it's going to create havoc for companies, and in particular, it's going to be problematic for smaller businesses to comply when there are different state regulations and something that is, by definition, crosses state boundaries.
Yep, thank you. That's great. Ranking Member Lummis, I have a feeling that you and I could, we could have easily another hour and a half of conversation with these excellent panelists about this topic, and I am, I think that there's a lot more work for us to do around this idea of kind of what model governance standards might look like. The President's executive order on AI, the AI Bill of Rights, and you all have laid out some possibilities. There's lots of work there, but I'm struggling to really understand like how that becomes implementable in industry as you're trying to figure out, as industry is trying to figure out what the rules are. And I'm also really struck by how one of the things that happens in AI is there's an imbalance of information. Like, information is power, and if you have more information as a seller than a buyer, then you're going to have more power. I'm seeing this right now in my own home state of Minnesota, where we have these big institutional investors who are able to, within a matter of minutes, when a house comes on the market, decide whether it's something that they want to buy or not. Well, an individual potential homeowner can't possibly compete with that. Yeah. And so that shifts the balance of power in how the real estate market has worked in the past in ways that I think are concerning. So I always think that if you want to understand the outcome, you need to look at what the incentives are. And to me, the question is, how do we build incentives into this system so that we are maximizing fairness and accountability and transparency as we try to set some guidelines, both to encourage innovation, but also to make sure that these systems are working for the public benefit. So thank you very much to all of you for this. Senator Cortez Masto, do you have a follow-up question at all?
Just a comment. I appreciate the conversation. Let me just say, I heard the be thoughtful, reasonable, and rapid 3 things Congress is challenged at doing. And so we are doomed from the start. But it would be helpful, it really would be helpful to get your thoughts maybe on the top 3 things we can focus on in the housing space, or the best model that a state has put forward. I understand the patchwork concern, but if there's a good model that can be brought to at a federal level, I think that's worth looking at as well. And then finally, thank you, Ms. Rice, for talking about CDA and 230. I couldn't agree more. We have to do something about that. So thank you.
Great. Thank you so much. Well, thank you to our witnesses for being here today and for providing such excellent testimony. Before we adjourn, I would like to enter several statements into the record from the Urban Institute's Housing Finance Policy Center and from Zillow, as well as reports and articles from Dr. Perry. Is there any objection? Without objection, those will be entered